Yeah, hello and welcome to another update video about QNT. We've just seen quite an impulsive sell-off to the downside. That is in line with the expectation that we are still going to see one more low, at least for QNT. As already explained in the last few videos, we have not yet seen the signal that would allow us to say the low has been made. We always need to be ready in this green area because we have now fulfilled with this move down the minimum expectations to complete this correction. But we always need to wait for a signal that gives us some promising, insights about that the trend could have changed. For everybody who's new, let's take a look first of all at this move to the upside of the low on the, in June here at $40. We moved up all the way. I think that was over 400% here to around $230. And now we are coming down in this ABC correction in a wave 2. This wave 2 should ideally finish in this green support area. This support area is based on the Fibonacci retracement levels between the 78.6 and the 61.8% Fib levels here between $81 and $112. These levels are highly relevant for a wave 2. I need to say very clearly, a break below the $80 level, below the 78.6% Fib level, if it is a sustained break below that, it would make a wave 3 that currently would follow, as per the roadmap here, very unlikely. That wave 3 could take us to around $400, maybe slightly below, but only if the $80 level is holding, which means that if we go down lower to the next Fib level at $62, I would not consider this anymore a good trade setup. It would not technically be invalidated, as per the Elliott wave rules, a wave 2 can go down as low as, in this case, $41, but it is getting an unreliable chart. It's becoming an unreliable chart. It just means that the correction down is as strong as the impulse, which shows the bulls aren't really strong. And it is always a sign of a caution there. So any drop below $80 makes this a very unreliable chart, and we have to raise significantly the probabilities for a breakdown to at least $40, and maybe even lower than that. So just that is the context. In this wave 2 correction then, we have here an ABC structure. A wave, B wave was a triangle, and then the C wave down. The C wave consists of 5 waves, 1, 2, 3, 4. And as explained to you, this was only a wave 4 with a high likelihood, and we're heading down lower in a wave 5. When we now, in the last video, I think, or last couple of videos, at some point we made that lower low that we've been waiting for, below the wave 3 low, which was here at $105. With that, the minimum expectations for this move down were fulfilled. However, we then looked at this possible signal to the upside because we saw quite a strong move up that went all the way up to nearly $120. And we looked at this and we said that we could only count 3 waves up at the time. So I said to you, to really confirm a trend reversal here, what we need to see is not only 3 waves, but a wave 4 and a wave 5. So 5 waves up. 5 waves up, and the need was to hold the $111. The $111 level, that was the 50% Fibonacci retracement of the wave 3. That's usually what you need to hold as a wave 4. If it goes below that, it becomes unreliable, the chart. And I think I made a video after that. We came down here and I said, okay, even as long as we're holding this trend channel, there is still hope for a possible 5th wave. It's not reliable anymore. So the expectation needs to be to continue down because we had only 3 waves up, but still a chance. And if we see 5 waves up, but we need to wait for the 5 waves to confirm that the trend has shifted, or that the trend has shifted to the upside. If we see the 5 waves, then this could be a wave 1 again, and we're waiting for the wave 2 pullback to enter. But again, we never saw it because, if something turns from a possible impulse into a diagonal pattern, it is just out of just due to the pure definition of what a diagonal pattern is, it gets unreliable. Because it can easily be a corrective wave, which has now been proven by breaking out of this channel to the downside and coming down to that low. So we now have a possible triple bottom here. These are highly unreliable, will probably not hold, and therefore I'm still looking for further downside, which has been the general expectation anyway. So I have, however, changed the subwaves of this last wave down to make sense of it, and it now makes absolute sense with this, because if we consider this last wave as a diagonal pattern, an ending diagonal in itself, which makes sense because diagonal patterns are often choppy. This is absolutely a choppy structure here, up and down quite a lot, very volatile. So diagonal patterns are often choppy because in a diagonal pattern you have a market that is a little bit undecided. The bulls are getting stronger, the bears are however still stronger in this case. So you get these ups and downs. Then it often happens towards the end of a trend, which makes sense as well because we should really reverse in this green support area. And it is very choppy, as I said, and the choppiness can be explained with these ABC structures that are happening in these subwaves. So all 5 waves have to be counted as an ABC in an ending diagonal, yeah, with a high likelihood at least. And that's what we see. ABC in wave 1, ABC in wave 2, A, B, C in wave 3, and now we should see an ABC at some point in wave 4, and then an ABC down in wave 5, and ideally we're holding the $80 level, which is certainly possible. If we look at where this trend line is going to land, so even if we break below it briefly, not a problem, but a sustained break would make this whole chart unreliable and would rather let us favor the bearish option. But yeah, so at the moment it looks like we are coming down in a C wave of a wave 3. That explains the impulsive nature of this sell-off, because the C wave is an impulse in itself, and we can possibly label here 5 waves, 1, 2, 3, 4, 5 in the wave C. That should come down if we hit the support level to around $90, maybe slightly lower, and that would finish off the wave 3. So we're basically, if you want it like that, in a wave 3 here, yeah, of a wave 3. We should then see the wave 4 to the upside. That could be quite a bit of a spike here, maybe into the $110 region again, and then another leg down, ideally not below $80. And that's sort of how I see the chart at the moment. I think that fits quite well with the expectation, because this move down is not an impulse. It looks very corrective or as a diagonal, right? And this last leg down sort of gave me the idea of labeling this as an ending diagonal, where we then have to label the subwaves as A, B, C. Okay, and that's my update about QNT, Quant. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership and also consider to maybe check out our trading course and technical analysis course that we offer on morecryptoonline.com. And yeah, also check out our Instagram and Twitter pages. There is additional content on there every day. Thanks a lot for watching. Bye-bye.